Hey, it's Clay Trader, and this will be a video chart on Chemtura Corporation, ticker symbol CEMJQ. Keep that in mind, this does have Q on the end. I did this one a little while back and wanted to do it again, as I know there's quite a few people out there that are playing it. So I wanted to map out the chart and get that all updated and kind of go over what's been going on and then what you should be looking for in the future here. So here we're looking at the daily chart, and as you can see, real nice couple of days back in late May, and then from there has pretty much been consolidating, and then recently started to drift downwards. However, after today's candle, that's a nice little bullish candle there. That's signaling a possible end. So don't think that this means that this thing's all of a sudden going to bounce, but it is signaling that there's a possibility here that maybe this was the bottom here of this pullback. So with that, I want to go over some of the resistance levels and so forth that are going to be lying ahead on any sort of bounce. And then also just talk about the support levels that are below you and kind of go over which ones of those you want to see hold, and kind of map out the thermometer, as I like to call it. And I'll explain what that means in a bit, but I wanted to go over those so you can see kind of how to gauge the chart and kind of analyze it in terms of whether or not it's a bullish or bearish type of move. So, like I said, we had these two nice moves and has since been pulling back. Got this candle. So now the question is, all right, let's say this is the bottom. What's lying ahead of us in terms of resistance on any sort of bounce? So with that, we're just gonna first use our moving averages, and the first one being this gray line here, which is the 10-day simple moving average. Currently, it's valued at right around 27 cents. So that's going to be one of the short-term resistance levels. But another one to just keep your eye on is this low right here, or excuse me, that's no longer a resistance. It's actually a resistance that was broken today. So that's just another sign of why this chart, looks halfway decent now, because you did break above this previous low, which had turned into resistance, but it's now back to support. But going back to the resistance talk, there's this other one right here, which is the high of these last two candles. Right here is 27 and 27, so 27 cents is going to be the other near-term resistance in terms of the 10-day here, and this actually you can see the 10s, like I said, at 27 and a half. This high is at 27, so they're pretty much corresponding perfectly with each other. After 27, you're looking at a little bit more resistance up in this area here. Let me get that to red so everybody. But here you can see there is quite a bit of congestion up here. This is valued at 32 cents. So nice little kind of hop here, or not hop, but a gap where the price could hop up there pretty quick. So with a break of 27, you could get a nice little pop. And then after that, you're looking at more of up in this region here. So once again, nice little gap there where the price could really get moving. But let's hop over to the other side of the coin now and talk about the support levels that are sitting underneath you, that you want to see hold. But if you're one of the players that likes to buy on weakness, they're possible entry points. But the first one being this level here, and this is what I like to call the kind of the ideal, or just the support level where if it holds, then that's really good, because I mean it wouldn't take much for this to fail. But if this can hold, that's just a great sign. But if it doesn't, you definitely shouldn't freak out by any means. The key level that I'm looking at that I really think needs to hold if this move's gonna stabilize out is this level right here, and I'm pulling this from back in this area in March. As you can see, there was a bunch of days where it just came up here and kept bumping its head, and when it finally did break, which was right here, I mean the rest is history. The price really took off. So this green line is really pretty important, and the other reason I say that green line is look right where the 50-day simple moving average is at, valued at 17 cents here. So you have two very important support levels right there where if the price falls below, though, that's not going to be a good sign for the chart. And when I talked about the thermometer earlier, that's what I'm referring to. As more and more of these levels fail in terms of support, just think of it as the chart is getting colder and colder and less bullish. So you definitely want to keep your eye on these support levels. But like I said, if it comes down here and hovers around a little bit, good chance it could take back off after it gets some of the consolidation out of its system. But for the time being, these are your supports, this one being very important. And then kind of the must hold, where if it doesn't hold, then that's just not very good at all for the chart, is this level right here. Let me move this up a little bit. But I'm taking it from the high of this candle, which was a previous resistance. Then we had these areas act as resistance, which corresponded to this. Once again, when it finally broke, it went. But I'm going to make this one actually a little thicker, just to remind people that this is an important one down here at 15 and a half, 16 cents. So keep your eye on that as kind of the must-hold type support level. Other than that, though, keep your eye on these resistances. The more and more these break, the stronger and stronger the chart becomes. But hopefully this candle is representing the bottom of this kind of slow drift downwards, and the rest of this week and next week you can see the price start to head back up. So if you have any questions, feel free to shoot me a message, and I will do my best to answer it. But if not, this was CEMJQ. Thanks for listening.